Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers. It's Friday, March 27th, 2026, and we're ready to unpack some fascinating market commentary from yesterday's data.
That's right, Ethan. Our AI-driven insights from Thursday, March 26th flagged quite a few symbols with a significant uptick in social media chatter. We saw a flurry of activity across numerous names, and the sentiment was a mixed bag. Some very bullish calls, alongside some significant cautionary tales.
Indeed. Today, we're zeroing in on a couple of those that really stood out, where the community's enthusiasm met our rigorous data analysis head-on. It's going to be an interesting dive into potential growth versus crucial risk management.
Let's kick things off with NXXT, or NextNRG Inc. We saw a considerable amount of discussion around this one yesterday.
Oh, absolutely, Brooke. The sentiment from user posts around NXXT was genuinely exciting. People are talking about a major strategic pivot here, less of a traditional fuel company and more of an AI-driven integrated energy platform. Users highlight the filing of patents for an autonomous AI bidding system, high-profile hires from Adobe and Microsoft, and new agreements for federal energy infrastructure projects. There's a strong belief that this shift could completely re-rate their valuation, moving them from a logistics multiple to a much higher infrastructure plus software play. They're also talking about strong accelerating revenue growth, even a 300% year-over-year increase in fuel volumes. Plus, insider buying suggests confidence from those closest to the company.
Well, that's certainly a compelling narrative, Ethan, and those strategic moves and revenue growth figures are indeed eye-catching. However, when we look at the hard KPIs for NXXT, they tell a much more sobering story. Despite that strong revenue growth, their net profit margin is a deeply negative minus 0.86. That means they're losing almost 86 cents for every dollar of revenue. Their earnings per share is also a negative minus 0.48, and their price-to-book ratio is a concerning minus 3.27.
Right, so profitability is clearly a challenge right now.
A very significant one. A negative price-to-book ratio, implies that their liabilities exceed their assets, signaling negative shareholder equity. That's a fundamental red flag for financial stability. And let's not forget the stock's historical performance. It's currently trading around 41 cents, dramatically down from its 52-week high of $3.59. While users are optimistic about future catalysts and strategic shifts, these fantastic-sounding initiatives haven't yet translated into actual profitability or a healthier balance sheet.
I see what you're saying. The enthusiasm for their AI pivot and federal contracts is strong, and those factors do have the potential to eventually improve their KPIs, turning margins positive and rebuilding equity. But it sounds like there's this huge gap between current financial reality and that future potential.
Precisely. Their previous ratings in our podcast have consistently been stay away or speculative gamble. And I'm afraid, despite the fresh bullish chatter, these core financial metrics mean we can't upgrade that rating today. For NXXT, our AI-generated insights suggest you stay away. The risk-reward balance right now is far too skewed towards risk, given the current financials.
All right, a tough but data-backed call on NXXT. Next up, we had some chatter around the symbol III. This post was quite interesting, framing Neuron as a biotech company with massive upside potential due to a pivotal Phase 3 clinical trial for a schizophrenia drug, plus a potential U.S. listing. The author even called it an asymmetric setup, implying the upside from trial success could be 3 to 7 times, outweighing a potential 60% downside in a failure scenario.
Well, Ethan, that asymmetric setup for Neuron sounds like a classic biotech story, and clinical trial successes can indeed be transformational. But here's where we hit a significant snag. The KPIs associated with the symbol III in our data don't actually match the description of a loss-making biotech company like Neuron.
Oh, really? What do the numbers show?
They show a company with a positive price-to-earnings ratio of over 20, a net profit margin of nearly 4%, and a substantial dividend yield of 4.65%. These are the hallmarks of a mature, profitable, dividend-paying company, not a pre-commercial biotech heavily invested in R&D and reliant on future clinical trial success. In fact, other news in our system for III points to 3i Group Capital Markets Day, highlighting growth in sales for a diversified investment company.
So the user post about Neuron is likely discussing a completely different company than what our system is identifying as III based on its financials. That's a critical distinction.
It is. While a U.S. listing or successful Phase 3 trial could dramatically change the KPIs for the biotech company Neuron, those potential changes have absolutely no bearing on the financial health or valuation of the company represented by our III KPIs. Trying to evaluate the user's bullish sentiment with these mismatched numbers would be highly misleading. Therefore, due to this fundamental discrepancy and potential for confusion, our AI-generated insight for III is to stay away. We simply cannot validate the market commentary with the financial data provided.
So, Brooke, let's wrap up our hunt for today. After all that analysis, here's our compiled list for deeper consideration. Investigate as buy? None. Investigate as cautious buy? None. Investigate as speculative gamble? NextNRG Inc., NXXT. And that brings us to the end of today's Daily Hunt for Multibaggers. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Absolutely. Thank you for joining us on this Friday. We appreciate you tuning in and encourage you to always do your homework.
We'll be back next week with more AI-generated market commentary. Until then, happy hunting.